What's up, crypto community, and welcome back to Bitcoin Bulletin. We're kicking things off with a bombshell from an economist writing every day who believes the Federal Reserve might be making a huge mistake by considering a rate cut next week. With inflation still above target and strong GDP growth, this economist argues a cut is a weak case, suggesting rates should be held steady or even raised. Could this decision spark major market shifts? Next up, we're taking a trip down memory lane to June 12, 2017, when CoinGecko reported that the Ethereum to Bitcoin price ratio hit an all-time high of 0.148. Fueled by the ICO bull run, Ethereum surged while Bitcoin saw a pullback. This pivotal moment highlights Ethereum's growing influence and the dynamic interplay between these crypto titans. We're breaking down what drove this historic peak and what it means for today's market. Then, get ready for some serious real-world adoption news. African fintech leader Chipper Cash, powering millions across the continent, has revealed that over 50% of its Bitcoin transactions are now running on the Lightning Network, thanks to Voltage. This is a massive win for everyday Bitcoin payments, showcasing incredible speed, reliability, and customer preference. We're diving into how this is transforming financial access in Africa and beyond. And finally, we're talking about the stocks that are outperforming Bitcoin itself. Wolfe Research is weighing in on the crypto stock surge since April, revealing which names are making the biggest waves. If you're looking for where the smart money is moving beyond just BTC, you need to hear this. Don't go anywhere, and make sure you're subscribed so you don't miss any of these critical updates. Federal Reserve rate cut under fire. An economist writing every day is sounding the alarm, suggesting the Federal Reserve's potential rate cut next week could be a significant economic misstep. Despite a seemingly slow hiring market, this economist points to other indicators like inflation well above the 2% target, strong GDP growth, and elevated inflation expectations as reasons to hold rates steady or even consider a hike. The argument against a cut is compelling, especially when considering the broader economic landscape. Inflation remains a persistent concern, with recent data showing it well above the Federal Reserve's target. Coupled with robust GDP growth in the second and third quarters and still high NGDP growth, the economic conditions don't appear to warrant a reduction in interest rates. While consumer confidence metrics present a mixed picture, the overall financial conditions are described as loose, evidenced by all-time highs in the stock market and low credit spreads. The surge in initial public offerings since 2021 and the increasing integration of crypto, particularly Bitcoin, into public equities through treasury companies and IPOs further suggest a market that is not in need of monetary easing. Using the Taylor rule, some versions suggest rates are about right, but others, including the economist's preferred Bernanke version, point to rates closer to 6%. This highlights a significant divergence in what the data might suggest versus a potential rate cut. The economist emphasizes that the debate should be about whether to keep rates steady or raise them, finding the case for a cut very weak. This analysis has sent ripples through the financial community, with many watching closely to see if the Federal Reserve will heed the economic data or pursue a path that could be seen as inflationary. The economist's contrarian view, while not speaking for the Fed, offers a stark warning about the potential consequences of premature easing. Will the Fed listen to the economic data, or will they make a move that sparks a whole new debate? Stay tuned as we break down the potential fallout from this looming decision and get ready for a deep dive into the crypto markets next. Ethereum's historic rally against Bitcoin. Back on June 12, 2017, the crypto world watched as the Ethereum to Bitcoin price ratio hit an unprecedented all-time high of 0.148, a milestone detailed in a CoinGecko research report. This surge wasn't just a fleeting moment. It was a powerful indicator of Ethereum's rapidly growing influence and a pivotal point in the dynamic relationship between the two leading cryptocurrencies. At the heart of this record-breaking ratio was the initial coin offering ICO bull run. Ethereum's blockchain, with its smart contract capabilities, became the go-to platform for new projects to raise capital by issuing tokens. This created a massive demand for ETH, the native currency needed to power transactions on the network, affectionately known as gas. As ICOs boomed, ETH's price skyrocketed, outpacing Bitcoin's growth during this speculative frenzy. On that historic day, Ethereum's price climbed to a new high of $398, while Bitcoin, despite reaching its own peak, saw a slight pullback to $2,701 the following day. This divergence in performance was the direct driver of the record ETH-BTC ratio. The CoinGecko report emphasizes that Ethereum's role as the backbone for this burgeoning ecosystem significantly boosted its market perception, positioning it as a serious contender to Bitcoin's dominance. While Bitcoin was solidifying its role as a digital store of value, Ethereum was showcasing its potential as a platform for innovation, laying the groundwork for decentralized finance, DeFi, non-fungible tokens, NFTs, and a myriad of other decentralized applications. This period sparked intense discussion among investors and analysts about the future of crypto. Was Ethereum poised to overtake Bitcoin? While the 2017 peak was a moment of extreme optimism and speculation, it also highlighted Ethereum's inherent technological advantages and its ability to foster a vibrant developer community. Although the ICO bubble eventually burst and the market corrected, Ethereum's underlying technology and ecosystem growth continued, proving its long-term resilience and cementing its status as a foundational pillar of the crypto economy. That 2017 peak was a wild ride, but what does the future hold for the ETH-BTC ratio as Ethereum continues to innovate? We'll keep you on the pulse of that ongoing battle, but first, we're heading to Africa for some groundbreaking news on Bitcoin payments. Chipper Cash drives 50% of Bitcoin transactions on Lightning Network. In a stunning display of real-world adoption, African fintech giant Chipper Cash has announced that over 50% of all Bitcoin transactions on its platform are now powered by the Bitcoin Lightning Network, facilitated by Voltage. This milestone marks one of the most significant deployments of the Lightning Network to date, proving Bitcoin's capability as an everyday payment rail at scale. Since its inception in 2018, Chipper Cash has evolved from a peer-to-peer remittance service into a fully licensed fintech powerhouse across Africa and beyond. It offers a comprehensive suite of financial products, including cross-border payments, virtual cards, and even stock investing. The integration of Lightning Network technology, personally spearheaded by co-founder Majid Maujud, has delivered dramatically faster, cheaper, and more reliable transactions for its millions of users. This move away from traditional, often unreliable fiat systems is particularly impactful in regions where financial infrastructure can be challenging. Chipper Cash customers are hailing the speed and reliability of Lightning payments. One user described it as like discovering fire, highlighting the stark contrast to the chronic outages and delays often experienced with legacy payment systems. The Lightning Network's near-instant settlement capabilities operate seamlessly, even when traditional banking systems falter. This leapfrog into future financial infrastructure is not just about convenience. It's about empowering individuals and businesses with consistent and accessible financial tools. The implications for Africa are profound. In markets where payment reliability is a major concern, Lightning offers a robust alternative. Chipper Cash's success with Lightning also enhances interoperability with other major platforms like Strike and Cash App, expanding its reach within a growing global network of Bitcoin-native payments. Furthermore, their recent Chessa initiative allows remittances via crypto rails, with instant fiat settlement in over 25 local currencies, underscoring Lightning's role in enabling global, real-time payments for those who need it most. Chipper Cash is truly leading the charge in making Bitcoin an everyday currency, especially where it's needed most. But what about the investments that are outperforming Bitcoin itself? We're about to dive into the hottest crypto stocks. Crypto stocks outperforming Bitcoin since April. Forget just holding Bitcoin. The real action might be in the stocks tied to the crypto world. Recent analysis from Wolfe Research indicates that crypto stocks have been significantly outperforming Bitcoin itself since April, signaling a major shift in investor strategy and market dynamics. This trend suggests that investors are increasingly looking beyond direct cryptocurrency holdings to capitalize on the digital asset boom. Companies involved in mining, blockchain technology, and crypto-related services are seeing their valuations surge, potentially offering a more accessible or diversified way to gain exposure to the crypto market. The timing of this outperformance, starting in April, points to specific market catalysts or a broader rotation into these equity plays. While Bitcoin remains the flagship cryptocurrency, the performance of related stocks indicates a maturing market where innovation and infrastructure play an equally crucial role. Investors are likely drawn to the potential for leverage and the diversified business models of these companies, which can offer upside even if Bitcoin's price movement is more subdued. The data from Wolfe Research is prompting a lot of buzz in the investment community, with many analysts and traders reevaluating their portfolios to include these high-flying crypto stocks. It's a clear sign that the crypto ecosystem is expanding, offering multiple avenues for profit beyond just holding digital coins. These crypto stocks are definitely heating up the market, but that's all the time we have for today's deep dives. Make sure you're subscribed so you don't miss our lightning round recap and full call to action. And that's a wrap on today's Bitcoin Bulletin. We saw an economist raise concerns about a potential Federal Reserve rate cut, the historic Ethereum to Bitcoin price ratio from 2017, Chipper Cash's massive Lightning Network adoption in Africa, and crypto stocks absolutely crushing Bitcoin since April. If you found this info valuable, smash that like button, subscribe for more market-moving news, ring that notification bell so you never miss an update, leave a comment with your biggest takeaway, and follow us on all social platforms.